Market ends in the green ahead of Trump's big tariff announcement. Nifty at 23,300 levels, but the sensex ends near 76,600 levels. Real estate, FMCG and consumer durables lead. Broader markets outperform.
The world races for US President Donald Trump's reciprocal tariffs. Meanwhile, sources told CNBC-TV18 India has given a far-reaching offer to bring down average tariffs to the US. Alongside, it's working on different scenarios to assess the possible fallout of US tariffs.
Indian bond yields fall by 10 basis points after RBI signals buying of 80,000 crore rupees of bonds via an open market operation. Market believes RBI may be preparing for a stance change and likely rate cut. Hello and welcome to a fresh new edition of Markets Forward, your go-to program where we aim to get you everything you need as we look ahead into the next trading session. But between today and tomorrow, there is the reciprocal tariffs. I'm Prashant. With me, my colleague Rima. Hi.
Hi. We did okay, right? Benchmark indices up nearly about 0.7, 0.8%. Considering the event risk ahead of us, we did okay.
Yeah, basically 50% of yesterday's losses recouped in that sense. We're still down for the week by about 0.8% on the Nifty. Things did come back in a decent kind of form, which actually leaves things in a bit of a tricky zone because, typically if you get, and the event has been built up so much, and will we get a bit of a relief rally? It's possible. The market, of course, is bounced today, so maybe there are some expectations already. It's a small one. I mean, it's 1%, 1.5% on the Nifty for the Nifty and the mid cap and the small cap indices. But it's possible that some of that is perhaps built in terms of what we've seen. On the other side, there are enough people who believe that even from here, despite all the build-up that we've seen, there is still actually the event itself may prove to be a bit of a risk-off for markets, not just India, globally as well. So, there's no way to tell. And I guess 1:30 a.m. If you're up for it, you can tune into CNBC and hear President Trump announce it. And I think that's the only way to really know if that is about what is going to happen as far as tariffs are concerned. Rima.
But a good bounce back, and as you said, right, from most of the sectors which were under pressure yesterday. So the Nifty Realty Index was up about 3.6%. Banks outperformed. The Nifty Banking Index up nearly 1%. Capital market plays higher. Many of the Tata Group stocks were up and about. FMCG broadly closed higher. IT was up and about. We'll talk about individual stocks. Let's quickly first tell you what we have for you on our show. The top movers and shakers with Hormis. The stocks on our radar include Tata Consumer on the back of Goldman Sachs upgrade. Meanwhile, India's pharma sector, how will it react to the US tariffs? We get you the numbers and the analysis. And then the key market events to watch tomorrow. But it's over now to Hormis. He's at the big wall with the top stock movers of the day.
No reason to complain with the moves that we saw today, particularly ahead of a major event. And one pocket that really shone bright in today's session was the retail segment, particularly after the business updates that most of these companies came out with. Bazaar Style Retail, V-Mart, positive commentary from V-Mart with us. V2 Retail also had positive commentary, upper circuit there. But Bazaar Style 20% higher in today's session. And in anticipation of stronger updates, Vishal Megamart and Avenue Supermarts too ended at the day's highs as well. Now, ahead of their own respective business updates, a lot of other companies also surged in today's session. Kalyan Jewellers was one of them, 12% higher today, ending at the highest point of the day, as did Godrej Properties, Macrotech, IndusInd Bank and HDFC Bank. That sharp spike that came in towards the close of the trading session in anticipation of their own business updates. Plenty of brokerage commentary came in today's session, but the star today was Tata Consumer after the upgrade that came in from Goldman Sachs, 7% higher in today's session. Can't say the same for both Vari and Premier Energies. A not so good report coming in from Bernstein. Dixon after the upgrade from Kotak, and Nestle after the initial gap down, recovering some of the losses despite the downgrade that came in from BofA. A lot of other newsmakers in today's session included Kernex Microsystems, which are on the back of the order win, a 5% circuit there. CSB Bank on a very strong business update. NBCC and GPT after an order win, and Paytm after the tie-up that they made earlier in the day also sent its stock price higher. And lastly, some of the movers on the volumes front, and Central Bank of India continues to sell off in this third straight day of losses, 10% lower in today's session as well. Quest Corp gave up some of those gains. Bombay Burma, Aegis Logistics too had a very good day on very strong volumes. Back to you guys.
Thank you very much for that. Let's go across to our guests now. Mayuresh Joshi of William O'Neill is still with us, and Shrikant Chouhan of Kotak Securities. Shrikant, let me start with you. Have you kept any positions open? What have you recommended to your clients ahead of the big event?
Yeah, good evening, Rima and Prashant. Today, really, the market did much better than the expectations. It was expected that the market may remain under pressure, and it may even break the previous low. But the best part was that it has not only managed the previous low, but also it closed at the highest point of the day. So while looking at the overall technical pattern, I am of the view that the markets are heading higher. And it was means we were expecting this particular corrective sort of pattern to the previous rally that we saw in the month of March. So we feel that the market has completed its correction somewhere close to 23,100. And now again, we are moving towards the levels of 23,800 or maybe 850. So yes, we have asked our clients to keep their long positions intact or look for adding some call options with a view that tomorrow, in case if there is any gap up opening, then we'll get opportunity to utilize that particular event.
Fair enough. Got that. By the way, it was not just stock markets, right, which were bouncing. We had bond prices, which also rose. Yields fell 10 basis points after RBI signaled buying of 80,000 crores worth of bonds via the open market. Lata is joining in with more details. Lata, take it away.
A 10 basis point fall is rather unusual. So the benchmark 10-year now, the new 10-year has fallen from 6.58 to about 6.49. So basically 9 basis points at least of fall. And that is, as you said, because of this quite unexpected 80,000 crore bond calendar. Very rarely does the Reserve Bank say that I'm going to do one every week. And it's, 4 bond auctions of 20,000 crore each. It indicates a determination of the part of the RBI to keep liquidity plentiful. Actually, we ended the financial year FY25 as well with a decent surplus in the interbank borrowing market. What you call core liquidity was positive surplus by about 1.5 lakh crore. And the Reserve Bank coming proactively and saying we will be doing every week indicates that they probably want to keep the liquidity at a 2 lakh crore surplus. The market is reading this as extremely dovish because that means they will be dovish in the monetary policy coming up on Wednesday next, April 9th. A rate cut was always factored in by the market, but now the market's reading more. Will they also go in for a stance change? The stance currently is neutral. Will they go in for something like, a more accommodative stance? Will the language change? And therefore, you are seeing a fairly outsized reaction in the bond market. But now the 25 basis point rate cut expected on April 9th is completely priced in. And then, of course, there are other small positives as well. The US bond yields have also fallen, and there is rising talk, including from Goldman Sachs, about a possible recession. So all that is also abetting the rally in the Indian bond market.
Absolutely. Mayuresh, any thoughts? It's a big move, 10 basis points. But, it's always you can... falling yields can be read as positive and can be equally strongly explained as a negative as well. Where are we at, according to you?
That's the problem, right? And therefore, I think it's a classic argument between whether it's growth or whether there is pain ahead in the economy as well. But frankly, I think how the Indian economy is positioned at this juncture, with the expectations of the tax cuts expected to take place from this quarter itself, a large part of the consumption basket, which was probably lagging for the past 2 to 3 quarters for various reasons, should see a very smart bounce back. Also, I think a part of whatever savings will come through might also come back as bank deposits. And therefore, I think the deposit growth, which has largely been lagging, might also start improving in the next few quarters as we speak. Obviously, I think as Lata just mentioned, I think the market is now penciling in a 25 bips rate cut. But I think financials, in my opinion, still look robustly placed, both in terms of the earnings trajectory, valuations, the price strength on how they are positioned as well. And therefore, I think financials, in our opinion, at Markets with India, looking at rating and rankings, might actually continue doing well in the next few months.
Got that. Let's talk about Tata Consumer, a top nifty gainer today, up 7%. This is after Goldman Sachs upgraded the stock to a buy, raised the target price. Nimesh had flagged it off early in the morning before markets opened up, as this is the stock to watch out for. Nimesh, fill us in with the details.
Well, Rima, as you rightly pointed out, it was the stock of the day, up 7%. Big move as well. And I guess, markets reacted also because after a long time, you've seen a bit of an upgrade on Tata Consumers today. So Goldman has upgraded the stock to a buy from neutral. They've raised the target price as well to 1,200. Now, the biggest concern for Tata Consumers for the last many quarters has been the weak earnings. And Goldman believes that earnings is at an inflection point for Tata Consumers. And from here on, they are poised for a very strong EPS growth between FY25 to FY27. And they've identified a couple of reasons why earnings will improve. The first is that there's going to be a recovery in the tea margins because they've raised the prices there. The second, strong innovation and distribution expansion of the growth businesses that they're focusing on. And third, the interest cost is going to come down because because of the acquisition that they've taken, that is getting paid down from here on. So all the three reasons is why they believe that earnings will improve. And hence, they've raised the EPS estimate as well between 3 to 7% for FY26 and FY27. And Goldman believes within the FMCG basket, Tata Consumer is going to report the strongest earnings going forward. So that was a key reason why for the upgrade. And that's the reason why we saw a big reaction, up 7% in today's market.
Absolutely. It never stopped. It never came off after starting strong. Nimesh, thank you very much for that. Shrikant, you want to sort of come in here? How is the stock looking? And any thoughts at all?
Yeah, Prashant, this one is showing a lot of strength on the chart. It has been consolidating since last almost 3 months within the range of 1,075 and 900, 925. And today it is when there was specific news flow on the upgrade and all, we saw the stock was crossing the level of 1,075. So broadly, I am of the view that the stock is heading higher. And eventually, yes, we could see the levels of 1,200. That's the overall view. And based on volume statistics, in case if there is any correction, then we should look for adding the stocks. The overall formation is suggesting us more bullishness.
Okay, let's talk about pharma. Now that, we fear could be the vulnerable sector, could feel the impact of Trump's reciprocal tariffs. But how do the tariffs stack up? India to US and US to India. Vinny is now joining in with the numbers.
Hi, so in terms of tariffs, right now what we're seeing, India is charging 10% tariff for imports from US, while US is not charging any tariff on these pharma products to India as of now. So if we see an amount coming in, we could see as much as 10% coming in, is what analysts are highlighting, that as much as 10% is a possibility. Now that could be the worst case scenario highlighted so far. Who gets impacted the most? Generic formulation players as well as CMO players are at high risk in the pharma sector itself. Companies with high exposures on the generic side will see the most impact, and as much as an impact of around 9 to 12% would be an impact on their EBITDA. A one-time hit is what they're saying. Now, when you look at it, who's the company, which companies have the most exposure? Gland Pharma, 50% exposure in terms of US sales. Consolidated revenue is what we're seeing. So the EBITDA hit that they would take would be around 8 to 10%. This is a one-time hit. Other than that, we have Aurobindo Pharma, 48%, 12 to 13% hit that the company could see if there's a 10% tariff. Zydus Life, Dr. Reddy's, that could be in the range of 8 to 12% as well. Lupin, Cipla, Sun Pharma and Torrent are the other ones, much lower versus the other companies which I just mentioned. Now, why is that so? Because you see Lupin, Cipla, Syngene, Piramal as well as Sai Life, they have plants and they have formulation plants, API plants, biologic plants in the US already. So that exposure reduces because Trump's plan is to increase the manufacturing in the United States. So if someone has to set up a plant, these people already have the plant set up in US. So that exposure and the impact could be a bit lower. So as of now, what we're expecting, the most impact would be on Gland, Aurobindo, Dr. Reddy's in terms of for the EBITDA front. If there's a 10% tariff, we'll be watching out for what actually comes in overnight from Trump.
All right, thank you very much, Vinny, for that. I mean, that's an area around which, even though there is a lot of uncertainty, there is at the margin some bullishness as well, for a variety of reasons. Mayuresh, any thoughts here? Pharma, you heard Vinny explain.
No, I think very logical that Vinny said. But again, I think our take is that it might not be as stringent as one is really expecting, because I think the cost of developing a drug is extremely costly and it's a time-consuming process. Obviously, outside the US, India is one of the maximum FDA-approved facilities as we speak. And therefore, I think the number of drugs in the pipeline, both generics as well as specialty drugs, a lot of Indian pharma companies have actually filed for NDAs. They've filed for special applications in terms of specialty drugs itself, which again are going to be pocket-friendly for the ultimate US consumer itself. And therefore, I think from a pricing perspective, our own sense is that because end prices and the entire product cycle itself is extremely time-consuming and extremely specialized process as well, I think there might not be too much of tariffs that might come on the sector as well. Again, that's our rating. We might be completely wrong, but if this probably happens, I think a large part of the leadership stocks who have already invested heavily in terms of creating the specialty pipeline might actually bounce back very, very smartly. So I think Sun Pharma, Lupin, as I mentioned earlier, is something that we continue holding in our global portfolios.
Okay, gentlemen, thank you very much for that. We will head into a short break, but as we do that, we'll leave you with some key corporate commentary from Lalit Agarwal, founder and MD of V-Mart Retail, where he talks about the improvement in mass consumption and more.
Seeing the mass consumption and the rural consumption inching up a little more, becoming a little better than the last year. And that also has driven some kind of consumption, especially in markets of Uttar Pradesh, Bihar, where we were struggling fundamentally. But I think, yes, volume growth is something which is very enlightenment. We're really getting good news about that volume growth, and this is also being led by fashion, because there's a lot of fashion change which is coming to the market. We expect some more consumption coming in especially from the tier 3 and the rural areas. That is where we believe if those consumptions are back and monsoon remains good this year as well, we would definitely clock once again almost a double-digit growth. That is what we should expect from our team, and that is what we are all getting prepared for.
Okay, welcome back. The big story, of course, globally is going to be the US President Donald Trump's reciprocal tariffs, which are being very, very closely watched. Now, how is this going to play out, both, of course, in terms of what is being proposed, discussed, the latest, etc., but also in terms of when will we hear the announcement actually come through? This is, of course, our colleague from the CNBC network, Karen So, with that. Karen, over to you.
We're now just hours away from President Donald Trump's tariff announcement, with America and its trading partners holding their breath. The White House has provided little detail on what to expect, but what we do know is this. Reciprocal tariffs will take force from today, immediately after the announcement. Treasury Secretary Scott Bessent has labelled this as a cap of the highest duty level, which could go down if countries meet demands. On Tuesday, the Washington Post reported that one draft proposal would see the US impose a levy of 20% across nearly all imports into the United States. A blanket tariff is a potential. Donald Trump will deliver his tariff announcement in the Rose Garden today at 4 p.m. Eastern Time. That is 9 p.m. BST, in an event that some are calling Make America Wealthy Again. Alongside reciprocal tariffs, there are further measures coming into effect from today. The US will place an extra 25% levy on countries that buy oil from Venezuela. It will also lift the pause on additional duties on Mexico and Canada, and the 25% tariff on all autos imported into the United States that Trump announced last week will come into force from today. So even complex on the detail we already have. Now, Europe is planning to retaliate. European Commission President Ursula von der Leyen has vowed to respond with a strong plan against the US, telling the EU Parliament on Tuesday that the bloc holds a lot of the cards in negotiations. Meanwhile, UK Prime Minister Keir Starmer has reportedly told cabinet members they should brace for tariffs to hit the UK from today, but that he remains hopeful of striking a deal down the line. Starmer has already signalled he's willing to pare back the UK's digital services tax on American technology companies.
Thank you. Well, let's now talk about Dalal Street and find out how Dalal Street is going into this event. Despite all the tariff tensions, we did okay. Nimesh is here with an insight.
Yes, in fact, we did quite okay, right? I mean, just ahead of the one big event, there was a lot of momentum, especially in the broader markets, with the mid-cap index gaining another 1.5%. In terms of individual stocks, though, the first are a couple of stocks which might be in focus tomorrow as well. The pharma names, Dr. Reddy's as well as Aurobindo Pharma, both saw delivery-based selling from larger FIs just one day before the event on Trump tariffs. So that's something to watch tomorrow as to how those stocks react. The second stock is Paytm. That's been buzzing in the last couple of days. The volumes have picked up. Even today, I understand there were very strong FI flows. And also for Paytm, the big trigger would be the MDR, on large ticket size and large merchant transactions. That could be a big trigger for Paytm going forward. So watch out for that. The third stock is Delivery. That's been buzzing in the last couple of days. While the stock is almost at 52-week lows, I understand there's going to be some corporate development very soon. A potential inorganic move is what I understand in Delivery is likely soon. And the last name is Godrej Properties. All those real estate stocks did well today. And Godrej Properties stands out because on back of very strong FI buying. So it looks like some buying has emerged at these levels in real estate stocks.
All right, Nimesh, thank you very much. We'll keep an eye on these names as we come back tomorrow on the next couple of days as well. Well, it's a wrap on this edition of Markets Forward. We're back with more news and updates in just a bit.